I am no different to any of you. I work a normal 9 to 5. I enjoy sports. I enjoy exploring new places, and I enjoy seeing my friends at the weekend. Alongside this, I run this very YouTube channel, and I also spend a vast majority of my time developing my financial literacy, learning about corporate finance and the financial tools that are available to ourselves in order to secure our financial future. Recently, I hosted a poll over on my community page, gathering the appetite for personal finance videos. Today, I'm going to run through the top 5 accounting principles that I have learned and believe that can put you well on your way to personal financial security. And in at number 1, setting a budget. A business would not operate without setting their own budget. If a business had no control over the money they were spending, then there's only one way that that's going to end up, and that is
an absolute disaster.
For you and for I, on our personal finances, it's exactly the same. And the number 1 priority of any budget is to control the amount of money that you're spending so that it doesn't impact your bottom line profit to the organization. Now, if we link that into our own personal finance situation, it's important for you to set a budget so that you can understand what income you have coming in, what expenses you have going out, and potentially any savings or investments that you may want to make. Having a budget will enable you to allocate those funds to the correct area to enable you to meet your financial goals. And the way I suggest you implement a budget is to just give it a go. Learn from experience. Understand your expenses. Understand how much you want to be saving, how much you want to be investing. You can always alter it as you go along. Just remember that any budget is better than no budget because it will give you an element of control over your finances. In at number 2, the variance process. Is any budget setting process good if you don't have a variance process and complete the feedback loop at the end? The variance process will enable you to identify your goals and how you performed against those goals. For example, for your savings goal, did you meet your savings target of, say, £500 a month? If you did, then great, and if you didn't, then why not? It gives you a basis of understanding of why you didn't meet your goals and how you can then amend your budget in the next month to ensure that you meet that goal. And it may also deter you from making the same mistake over and over again. And then at number 3, we all have our own financial statements. Now, studying towards your accountancy qualification, you will know that businesses have profit and loss statements, they have balance sheets, and they have cash flow statements. Us as individuals are no different. We have our P&L, we have our balance sheet, and we have our cash flow statement. And it's important that you understand all 3 of these elements and principles for your own personal finance. So for example, your P&L could be your monthly P&L. Well, this is the income I've got, this is what I've spent, and how much have I got left over. Your cash flow statement will take that one step further. Look at your total cash flow position, take into account the monthly impact to give you your longer term financial cash flow position so that you can better understand your cash flow situation so that you can better make decisions going forward. And your balance sheet is all about understanding that you have assets and liabilities to yourself. An example of an asset is investing in a share that over time will pay you dividends and may even return you capital growth. And then a liability is something like a car where you may be leasing that vehicle, paying interest on your loan, and then paying that ongoing expense each month for the remainder of the 3 to 4 years that you would have signed up for that lease. It's important for you to understand how your short-term decision making will impact your overall net worth in the short, the medium, and the long term. Number 4, invest in assets, not in liabilities. Put your money where your money will make you more money. Don't put your money in areas where it will cost you more money. For example, you could put a deposit down on a car. That is going to cost you money for the next 4 years if you were to lease that vehicle. You have then got an additional 4 years of interest, which is essentially worsening your financial position. Instead, you could have invested that money into an index fund that backs the strongest 500 companies in the US, which is going to generate you dividends on a quarterly basis and hopefully even generate you some capital gains. These decisions will give you the stabilization, making the right decisions by investing in assets over liabilities, and then last but not least, protect yourself from taxes. Businesses have useful instruments that they can use in order to reduce the amount of tax that they pay. And our personal financial position is no different. Now, I'm not saying here you need to illegally avoid paying tax. There are fantastic instruments available to us as individuals that can help us generate more money but pay more tax. And here in the UK, the obvious ones are the ISA, such as the individual savings account. In the US, you have the 401k and the Roth IRA. You also have the trade-in tax limit and the capital gains tax limit. And all three elements of these will enable you, if you diversify your earnings, to pay less tax on those earnings. Now let's look at this as a whole. You can earn £50,000 a year from your one job. You are saving and investing into an ISA, which is generating you income tax-free. You're doing a bit of work on the side, which is enabling you to earn an extra £1,000 a year, which is also tax-free. You're then investing your money from your core job into the markets, making capital gains, generating dividend payments, and you're getting up to £12,000 completely tax-free. Diversified income is a great way for you to grow your income and being less liable for the taxes that you need to pay. Now, that is the first of my personal finance series on this channel. Hope you can see the link between accounting and finance, but that is all from me today, and I'll see you in the next one. Goodbye.